From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. We're going to start today in Africa, where the Secretary of the Treasury, Janet Yellen, is on a 10-day tour, in part to talk about some of the issues with emerging market debt, particularly as interest rates get higher, but also to talk about African countries, about where they are in the issue of Russia and Ukraine, trying to win them over. She had some statements to make today in Pretoria, South Africa. And to bring us up to speed, we turn now to our Bloomberg Washington correspondent. He's the host of Sound On weekdays on Bloomberg Radio. He, of course, is Mr. Joe Matthew. Joe, thanks for being with us. What did the Secretary have to say?
Well, it's interesting. For a little backdrop here, David, it's important that we go back to the African Leaders Summit that took place here in Washington last month. It was the Deputy Secretary of Commerce who probably said it best. Quote, "We took our eye off the ball in Africa, and investors and companies are having to play catch up." Janet Yellen has spent the past week trying to catch up on that idea here, but also against the backdrop of competition here with China. Three-country tour to promote American investment just as China overtakes the U.S. This is important, David, in foreign investment. Trade between Africa and China topped $250 billion in 2021, up by more than a third. So Yellen is ending her trip in South Africa, which has very strong ties with both China and Russia, and about to host naval drills, in fact, with both of those countries next month. That's why we saw Sergei Lavrov visit South Africa the day before Janet Yellen arrived. Yellen has not mentioned the drills, but she is talking about extending restrictions on Russian oil, confident that talks will soon wrap up here to extend current restrictions above that $60 price cap that we've talked about here. Separately, David, the EU is floating a plan to set a price cap of $100 a barrel on Russian diesel, $45 for a cap on other fuels here. Speaking in Pretoria, to your point, Yellen did not say whether those proposals were acceptable to the U.S., but the Group of Seven and the EU will have to have those numbers figured out by February 5th. It is also worth noting that President Biden says he will make a trip to Africa at some point this year as well. So a lot of competition for investment, for dollars, and for politics in Africa, David.
Joe, that was just a terrific job of laying out a very complicated situation, but it sounds like we're playing from behind, we being the United States of America playing from behind. China's been there for a good long time. They've put a lot of money into it, and for that matter, Russia's had a lot of relations there.
That is absolutely right, and that's why we're going to see those naval drills coming up in just the next couple of weeks. To think that that's happening now with the war in Ukraine is remarkable. But South Africa has been agnostic here, has essentially not gotten involved one way or the other, remaining neutral on the war in Ukraine. But it also reminds us of the pivot to Asia, David. If you look at this on a global level, this administration is playing catch up in a number of quarters. This week, it's Africa.
Yeah, and one of my questions, Joe, I'm not sure if anyone can answer this question, is the President of the United States, Joe Biden, made a lot of sort of suggestions about things we were going to do about Africa, including on the trade front. Can he deliver that with Congress? Is Congress behind him on the move for Africa?
You know, that's a great question when it comes to everything now with this new Republican House majority, who believe that globalism is coming to an end. And that nationalist streak in the House of Representatives could slow that effort a little bit. But again, when you get back to the war in Ukraine, and of course the sort of alliance that we're seeing between Russia and China, it's not too easy to bring people to the conclusion here in Washington that more needs to be done.
Joe, thank you so very much. That was terribly helpful. That's Joe Matthew. He is, of course, the host of Sound On every afternoon, Eastern Time, 5 p.m. In the meantime, earlier today, we talked with the former Treasury Secretary, Larry Summers, about Janet Yellen's trip to Africa, and specifically about the issues having to do with African debt. This is part of what he said.
I think Secretary Yellen is building an important legacy around the developing world. She has pushed for reform of the World Bank. She is going all the way to Africa to highlight the importance of these debt issues. A crucial issue is going to be finding a framework in which the United States and China can cooperate.
We turn now to somebody who has dealt with, in fact, the World Bank. She worked there. Ann Krueger is senior fellow now at the Johns Hopkins School of Advanced International Studies. But earlier, she served as the chief economist at the World Bank, and before that, as first deputy managing director at the IMF. So, Dr. Krueger, thank you so much for being here. You know about this issue of debt relief very well. Back in the days of the Clinton administration, when Larry Summers, in fact, was Secretary of the Treasury, they made some progress on debt relief. But it's a very different situation now because of the presence of China. Give us a sense about the debt owed by sub-Saharan African countries. How much of it is to China at this point?
Well, the first comment to be made is that the debt owed to China by countries in Africa and elsewhere is different. It's not the same for different countries. Some countries are already in a bind in that they cannot finance their debts, and others are in reasonably good shape. So it is not a continent-wide problem as such. It is a country-wide problem specifically. And there is a real problem because some of those countries really have big overhangs of debt, and they need debt restructuring. But debt restructuring is normally led by the IMF, with then the private sector agreeing to a comparable haircut. And unfortunately, with the public sector, the countries in Europe and the Asia that have been lending money, they've been able to agree in the past together among themselves. But China has refused to enter into that group and is holding up the restructuring of debt in countries which have to have it before they can get on the move again. And that includes several African countries which are very close to ready otherwise to get out of or begin getting out of the crisis they're in.
Obviously, this is terribly important to the countries involved if, in fact, they do have too much debt. And, of course, it depends in part on why they have the debt, whether it's for investment, for other purposes. But beyond that, what does it mean for the global economy if these countries really are overwhelmed by debt?
Well, it isn't the global economy, it's individual countries, and that's part of the problem. And the problem is that not all, some of those countries, it will be not that difficult to sort out debt as it happened before. But in other countries where the Chinese have a large chunk of the debt, it cannot be done because certainly you cannot and nobody can expect private creditors to take a haircut when the money is just going to go to pay the Chinese, which is what would happen if the IMF were lending to a country where indeed it had not restructured part of its debt.
When we talk about restructuring, just help us understand that exactly. Is this suspending payments, extending payments out into the future, still owe the money, or is it actually forgiveness of some of the principal?
Well, in the past, it has typically been some kind of a haircut in the sense of reducing the entire amount of debt held and then agreeing that everybody will take the same proportionate haircut. It could also be extending maturities, and apparently the Chinese are willing to consider that, and they are not willing to consider a haircut. But they will postpone, and there's some movement on that front, and there have been a couple of announcements in the past couple of days hinting that that may be resolved at least for one country, but there are still several countries where otherwise they're set to go ahead with things that would enable them to start digging themselves out of the debt trap they're in, but they've been unable to do so because the Chinese have not yet agreed.
Well, coming back to the Chinese, I'm glad you brought us back there because the United States and China has not, may I say, sort of seen it the same way on a number of fronts in recent months and years. Is there a realistic prospect of some cooperation, and is that necessary, a cooperation between the United States and China to really address this debt restructuring?
Well, I think there are several issues on which there is not only scope for cooperation, but there's gain, and there's some issues where, of course, it's going to have to be otherwise. On the debt front, I think the Chinese are going to find that they are confronted with countries that can't pay too. I think the IMF listed, I think it was 46 countries, many of which are in Africa, which are in imminent danger, as they put it, of having to do something about their debt because they were going to be unable to continue servicing it. So I think it's going to become a problem for China as well as the U.S. Part of China's problem is not maybe that they're unwilling, but in addition, they have several agencies which lend individually, and apparently there's no coordination across them, just as there's not that much coordination between the various banks that lend to developing countries with each other. It's the same thing in China between a development bank and the Belt and Road Initiative and other institutions they have, each of which is doing their own decision as to what to do.
Fascinating and really timely discussion. Thank you so much for it, Dr. Krueger. That's Ann Krueger. She's senior fellow at the Johns Hopkins School of Advanced International Studies. Coming up, the financial world cares about the debt ceiling and a possible U.S. default. Do the American people care about it? We're going to ask pollster Frank Luntz next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, it's another day. It's another day without resolution of the debt ceiling standoff between the Republicans and the Democrats, or according to Mitch McConnell, maybe more between the Speaker of the House, Mr. Kevin McCarthy, and the President of the United States, Mr. Joe Biden. To bring us up to speed on how the American people may be looking at all this, we talked a lot to politicians, but what about the American people? We're going to turn now to Frank Luntz. He's pollster and strategic advisor. He's also CEO of FIL Inc. Frank, great to have you back with us. As I say, we talk about this within the Beltway all the time and how dramatic it is. And by the way, the financial community really cares about the possibility of default. But do the American people, as you go across the country?
They don't really understand it. They know that it's a challenge. They hear both sides. But let's put three elements out to clarify. And this is something that frustrates me as a pollster. Number one, the public does not prioritize the debt, even the budget. To them, the key element here is to stop wasteful Washington spending. Now, we can argue over how you define that, but the public believes it's not a tax problem, it's a spending problem. Number two, they're agitated that the Democrats are the president for saying he will not negotiate. Isn't that the role of Washington, to come to a conclusion, to achieve results and solutions? And number three, for the Republicans, they come across as trying to use this as a campaign issue, as a political issue. So basically, David, it's a pox on every house, and the feeling that Washington cannot get its act together. They're already mad at D.C. for immigration, the failures there. They're already mad at the failures over energy and the environment, and now they've got a new issue. There's a reason why the public trusts Congress and the White House less than they ever have before, and it's playing out right now on the debt ceiling.
I wonder if it's symmetrical, though, in this sense, Frank. We think we know who's in charge ultimately on the Democrat side. It's the President of the United States, Joe Biden. What about the Republican side? We now have Mitch McConnell, the minority leader in the Senate, saying, wait a second, I have nothing to do with this. This is between Speaker of the House, McCarthy, and the President of the United States. Can Speaker of the House, McCarthy, basically do a deal? Because I've always learned that when you negotiate somebody, you want to negotiate with somebody who can actually do a deal. I don't know whether Kevin McCarthy has the votes.
Well, that's process. And the first response to that is no, he can't. He does not have the votes right now. It's a very good point to raise. But secondly, it's not just an issue of doing a deal, it's what's in the deal itself. If you are paying higher prices for everything, if you are struggling right now, and someone says to you, you're going to have to pay even higher taxes, the public is going to say, absolutely not. Second, that you're showing photographs of Speaker McCarthy. The public is absolutely on his side when it comes to getting the spending out of Washington under control. The idea that every single year the prices are going up again and again, or the cost, I should say, of Washington spending. But third, and this is the challenge for the president, you created this situation over the last 2 years by all these new commitments, all these new programs, all this new spending. A lot of it was necessary, but the public is saying, wait a minute, if you spent us into this situation, don't you have the responsibility to work with the Republicans to get us out of this situation? And if Wall Street looks at this and says, you know what, I think they're all crazy, I think they're all part of the problem rather than part of the solution, the American people would agree with that.
Frank, a long time ago when I actually practiced some law over in London, the barristers had an expression about condescending to particulars. And I wonder if that's an issue here as well. If you talk in the abstract to Democrats or Republicans, they say, yeah, we got to get spending under control. The problem is what spending and who's it going to affect? I mean, the American people may want that done, but are they going to want it when you say, okay, this is specifically the program that's going to affect you, taxpayer, and do you want that cut?
It's the whole reason why everyone's afraid to touch Social Security, why they're afraid to touch Medicare. We know that those are the programs that are causing the greatest impact on the budget, on the debt. But I'm going to use your London reference. I was over there in October when the government collapsed, the prime minister had to resign, and the pound almost hit parity, which has never happened before, because they were playing politics with economic policy. And what happened in Britain can happen right here in America if they're not careful.
So yesterday, the President of the United States went to Springfield, Virginia, and he gave a speech that some people took as sort of an early version of what he wants to take into 2024, assuming he's running, which a lot of us do, on the economic front, basically saying those Republicans are going to really run us right into default if we don't watch out. In the meantime, we Democrats have done a lot of good for you. Does that message resonate?
It resonates, yes, it does, unless the Republicans effectively challenge it. And the way that they challenge it is, are you getting your money's worth from Washington? Are your taxpayer dollars spent as effectively as you would spend it itself? And finally, are we holding Washington accountable? Are we making government more efficient, more effective, and more accountable? The Republican message in a vacuum is stronger than the Democratic message. But Joe Biden will be effective if the Republicans don't respond to that.
Well, the Democrats did, at least to me, better than expected in November. Is President Biden getting some of the credit? Where are we right now on right track, wrong track? Something I like to look at are approval ratings. Where is President Biden? Is he starting to get some credit for the things he's claiming credit for?
He gets credit, but his numbers are almost as bad today as they were on Election Day. And this is what's fascinating for the Republicans. How can you have an economy that's struggling? How can you have a presidency that's damaged? And how can you have basic chaos domestically, locally, globally, and still not pick up that many seats? And the answer, quite frankly, is one, Donald Trump got involved in the election campaign for the Republicans and did a lot of damage for the Senate races. And then you had the issue of abortion, which I'm not going to go into here because this is an economic show, but abortion helped the Democrats turn out their voters. The Republicans have to look at 2024 and ask themselves, what are we going to do differently to actually achieve what we were supposed to achieve in 2022? And the first thing that is address the debt ceiling and wasteful Washington spending and show the public that you actually can make government more efficient, more effective, and more accountable. David, if they can do that, they're going to have a great 2024. If they fail at that, the Democrats are going to get reelected.
As we go toward this debt ceiling issue, we heard today reports that perhaps some Republicans might be interested in extending it to September 30th, which happens to be when the end of the fiscal year is. So you could possibly have a shutdown of the government and a failure to pay our debt at the same time. A perfect storm here. I mean, I'm old enough to remember what happened with Newt Gingrich when he said to shut down the government. Is there a risk here for the Republicans? They can get blamed for this in 2024.
There absolutely is a risk. That's exactly what happened under the Gingrich speakership, where he walked into that with all the cards and the public behind him, and the Republicans left having really suffered a political defeat. My response to your question, I'm trying to think of how to do this where you don't get thrown off the air. I think the phrase or the initials are WTF. If we go through that situation in September and we play brinksmanship, I can tell you one thing. The American people are going to say a pox on both your houses. Get it done, give us results, give us a solution that allows us not to pay more in taxes. That all they're asking for, by the way, is 3 cents on the dollar. I'm waiting for a politician on either side, in the House or the Senate, to say, you know what, let's do this. 3 cents. We can save 3 cents on waste, fraud, abuse, mismanagement, even corruption. You do that 3 cents thing, and that person is going to be a national figure. That person should run for office, because if you can show that we can save 3 cents on every dollar on every program, you deserve to be president of the United States.
Frank, it's always such a great pleasure, a privilege really to have you on. Thanks for being with us. That's Frank Luntz. He's the famed pollster and strategist. He is FIL CEO. Still to come, the U.S. moves with Japan and the Netherlands to bar chip-making equipment from China. We'll talk about the consequences with George Magnus of the Oxford Research Center. This is Balance of Power on Bloomberg Television and on radio.
Season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number.
Blowing through estimates.
These guys are minting money with exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
This quickly become just a really crappy business model.
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's been a week with a lot of economic data, a little bit more to come next week, and then, of course, we get the Fed decision next week. So to give us a sense of how the markets are positioning themselves for all this, we welcome back Kriti Gupta. So, Kriti, where are we?
Well, a little bit of green on the screen, David. The S&P 500 up 0.4%, but I think the real outperformer here is the NASDAQ, up about 1% on the day. It really speaks to the theme you've seen all week long. Remember, a lot of the tech earnings have kind of been slowly trickling out. You've had Tesla numbers come out, Microsoft numbers come out earlier this week. Next week, we're expecting Alphabet, Apple, and Amazon, all in one day, by the way, on ECB Day. So that'll be a fun Thursday for us. But the stock market is really telling us here that tech is really leading this trade. And that's an important piece of the equation because that was really the one that was leading the declines all of 2022, in addition to, of course, the broad sell-off that you saw. So to see a rebound in the tech sector specifically really kind of creates a little bit of a foundation for a much broader rally. Now, David, I was telling you earlier in the commercial break, I did actually speak to some traders today who are saying, look, there is a lot of positive sentiment out there right now. But one of the reasons that perhaps there are some people who are a little bit bearish right now is because this has actually been a really strong couple of weeks for the stock market. The recovery you've seen, the complete pivot when it comes to consumer sentiment and from market sentiment, that is something that we haven't seen for at least a decade. So there is that optimism that's baked into the market, but some would say that's a reason to sell.
Yeah, I'm going to push you a little bit. When you talk about tech, that's all, everything you mentioned was basically consumer-facing tech, for the most part, not business-facing. I mean, Intel, for example, did not have such a good ride of it.
Right, and even you saw that in Microsoft as well, right?
Yeah.
The idea here simply that the cloud computing business, still 33% growth is what I believe they were forecasting, but it's that momentum of growth that you're not seeing accelerate as quickly. And still, that really comes down to business investment. Remember, one of the issues for the economy here is not just that the American consumer is spending, but that American businesses are spending too. And post-COVID, there was this big move, especially in 2020, 2021, to hop into the cloud businesses, to hop into cybersecurity. That is kind of slowing down as we talk about cutting costs, laying workers off, dealing with any sort of macroeconomic headwinds that are headed our way. And that's really where you see the turn. But David, still, if you look at some of this price action, I'm looking at our MOV function on the Bloomberg terminal. You guys can check it out. Of course, 35% of the move is just Tesla.
One last one. Energy was big in 2022. What about Chevron now with all the cash they've got on hand?
Yeah, Chevron is having another great quarter. But remember, look, this kind of makes up for a lot of the lost quarters in 2020 and 2021 that you saw when it comes to pain for that company. Of course, the earnings are still looking pretty good. Increasing buybacks, increasing dividend payouts. But let's see how long it lasts.
We will see with you, Kriti. Thank you so much. That's Kriti Gupta. You can catch her anchoring at 1 p.m. Eastern Time on Bloomberg Markets. Coming up, Congress considers new regulation of releases from the Strategic Petroleum Reserve. We'll talk with Sara Vakhshouri of SVB International. This is Balance of Power, and we are on Bloomberg Television and on Bloomberg Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. To keep you up to date with news from all around the world, we turn now to Mark Crumpton here with the first word.
David, thank you. The European Union is exploring ways to help crack down on Russian war crimes in Ukraine. Bloomberg has learned the EU is trying to create a special prosecution office while separate talks on a special international tribunal to punish crimes of aggression continue to be mired in legal wrangling. The UK's Chancellor of the Exchequer is dismissing calls for tax cuts. In an exclusive interview, Jeremy Hunt told Bloomberg Television, quote, "We don't have the headroom," end quote. He also pitched Britain as a hub for high-tech industries and innovation.
I think we have the opportunity with our universities, our financial services, and our technology strengths to be a Silicon Valley.
Mr. Hunt also pushed back against U.S. and European plans to subsidize green industry, which threatened to divert investment from the U.K. President Biden's chief of staff is confirming he's leaving the White House. In a letter to the White House staff, Ron Klain says the transition to his successor begins today and will be complete around the State of the Union address a week from Tuesday. The president has named his former COVID czar, Jeff Zients, to be Mr. Klain's successor. He's held a series of roles under Mr. Biden and former President Barack Obama. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Well, energy, and particularly oil and gas, were very much in the news throughout all of last year, starting with the war that Russia inflicted on Ukraine, and then, of course, the crisis that happened after that, and President Biden getting involved because of the price of gas at the pump, which caused him to release some of the reserves in the Strategic Petroleum Reserve. That is now back in the news as Congress is considering maybe restricting what the president can do with the SPR. To take us through the oil picture generally, and specifically the SPR and the piece it fits in that overall puzzle, welcome back now Sara Vakhshouri. She is founder and president of SVB Energy International. So, Sara, thanks so much for being back with us. There's a larger picture here we want to talk about, but first, what role does the SPR play in it?
Very good question, and thanks for addressing that. It's really important. SPR was established by President Ford for the time of extreme emergency to help the country and people to be able to surpass that emergency. Could be war or embargo. What happened since the beginning of Biden administration? The administration withdrew about 270 million barrels of SPR oil reserves, and now that's really in the lowest volume of its historical level in the past 40 years. About 42% of that has been emptied. And this has two implications. One is a national security implications, because U.S. adversaries would know that at the time of embargo, war, or any pressure that would interrupt the supply, U.S. defense, especially for how many days has supply. Also, the prices of gas pump would have impact on people's economy, obviously. The other thing is that when they want to refill the SPR, that creates additional demand and could increase the prices, because now I told you like 42% of SPR have been withdrawn. And if we want to refill that, that's additional demand in the market. Could we have U.S. producers fill that with $75 per barrel of oil? They all said they are not going to produce oil for selling it to the SPR, to the U.S. government for SPR at $75 per barrel.
Sara, it strikes me that there's one, I think, very big difference between now and when Gerald Ford was president, and that is the U.S. capacity to actually produce oil and gas. With fracking and other things, we have a lot more production capacity now. I think we're the largest producer in the world, are we not? Something like that. Does that change the strategic calculus?
That's true, but also we should consider that our demand and our consumption is also much more than that time. We are consuming more than the time that SPR was created. But also, what is important is that our production in the U.S. did not recover from its pre-COVID level yet. So we are not at the peak of production yet, and this is a very important. President Biden administration, because they have a very hawkish view of energy transition moving toward renewables, they tend to forget that it's still United States, our allies, and the world still going to use oil, a lot of oil. And by the time that we are fully, completely moving from oil, it's going to take a long time. But especially for transportation in United States, yet we have not fully being independent from oil in our transportation sector, especially the aviation and our defense, especially our defense, is still they are using oil when it comes to jet fuel, especially for flying or for gasoline or diesel. So we are not yet fully 100% independent from oil consumption, oil production, oil consumption. The other thing is the crude quality. The oil that we are producing inside the United States is not the oil that our refineries in the United States are processing. In the US, most of refineries are processing the heavy oil that SPR, most of the oil in SPR is the oil that our refineries and our domestic need require that. But the oil that we are producing in the United States is mostly exported because it's not the quality that we are really needing in our refineries in the US.
Sara, I understand why you might characterize the Biden administration's position on energy as hawkish and converting to renewables. Has that modified any, in your opinion, since the war in Ukraine?
It had, of course, yes, it changed because now we see that administration has started encouraging and then strongly demanding U.S. oil producers specifically to produce more oil. They also put pressure on the OPEC to produce more oil. So they definitely realize the importance of oil. But what is very important is that while Biden administration is criticizing the U.S. oil producers for not putting all the profit they are gaining back into production, they forget that some of these environmental policies and also harder or like higher costs that producers have to bear because of the regulation that Biden administration have put in place, it doesn't make an economic sense for producers to increase the production for short term, because it's Biden administration asked companies to increase production for this year, next year, in 3 years, but they're expecting that the country, our own country, doesn't need any more oil in the medium to long term. And investment is a long-term decision. So this is not something that we would like to anticipate it anymore, because we have had oil companies in U.S. energy companies, oil producers particularly, coming and giving their reasons for why they are not producing more publicly.
Sarah, one more if I could. Our discussion has largely been about supply thus far. What about demand, and particularly China? China seems to be coming back online here. Is that going to put a lot more stress on the international oil situation as they consume more oil?
It does. Well, fortunately, when we're looking at the balance of demand this year, that China is gradually coming out of its COVID restriction, something that is crucial to note is that we are expecting lower demand this year because of global economic slowdown in the U.S., around the world, potential recession, and all of this will contribute to lower demand. And International Energy Agency and some other organization anticipated that even though the Chinese demand is going to grow and they're going to contribute to global economy and increase of demand, is still the reduction of demand because of the global economic slowdown is not going to be offset by this Chinese demand. But again, something about Chinese demand we don't know. We are certain that the Chinese demand is coming back to the market, but we don't know when and we don't know how much. At which point is coming out, and that creates an uncertainty.
Sarah, this has been very helpful, as it always is. Thank you for being back with us. That's Sara Vakhshouri. She is president and founder of SVB Energy International. Coming up, the U.S., Japan, and the Netherlands move to bar chip-making equipment going to China. How big a difference will it really make? We're going to ask George Magnus of the Oxford University Research Center. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We've been hearing about this for a while, and that is the attempts by the Biden administration to get an agreement with Japan and the Netherlands involving very highly sophisticated equipment to make microchips and making sure that those are not going to China anymore. To give us a sense of how important this is, we turn now to George Magnus. He's Oxford University Research Associate and author of Red Flags: Why Xi Jinping's China is in jeopardy. So, George, great to have you back with us. Give us a sense of how important you think this might be.
It's really important, David, because as people may remember, at the end of October last year, the Biden administration introduced some quite strict regulations on licensing and export controls of advanced semiconductors, not just to one or two Chinese firms, but to the entire China integrated circuit semiconductor industry. So that was unique in terms of export controls. But they were unilateral controls, right? So they weren't announced in conjunction with other countries. So, bearing in mind there are probably only about a half a dozen companies really that are in the world, and they happen to be in the United States, Japan, Korea, and one very important company in the Netherlands, which are responsible for the lion's share of what counts as important in the most advanced parts of the chip industry. It's really important to get the Dutch government or the Dutch company and Japan on board. I mean, I think these things will be taking place, behind closed doors. Nobody's going to make a big announcement about these things, but I'm sure the U.S. administration will be working very hard to get all its allies on board.
So that's changes by the United States and its allies here with respect to China. What about China, changes within China? Because it looked there sort of at the end of the year, beginning of the year, that President Xi Jinping might have been pivoting on any number of fronts. I mean, certainly on the COVID zero, there was a big pivot on that, apparently on some of the crackdowns on big tech. And even perhaps when it comes to Russia, it's not like he switched his position, but he doesn't talk about it quite so much anymore.
Yeah, I mean, on that one in particular, I think the Chinese position on Russia is unyielding and unchanging. I mean, they may not be as vocal, but we can't really imagine a situation in which China would basically back away from supporting Putin or Russia, if only so that they don't have, a kind of a terrible situation in the East, so to speak, which actually calls for a complete redrawing of kind of military priorities and applications and so on. So I think support for Putin's war in Ukraine, I think, will continue. But you're absolutely right that, I mean, the abandonment of zero COVID was the biggest pivot of all. But the government has also backtracked on the balance sheet restrictions for property developers, eased restrictions on mortgages and to stimulate the housing market. Some government ministers have been talking publicly about stimulating or promoting consumption. It's not something you hear from Chinese officials very often. And of course, there's been the statements, much friendlier, fuzzier statements about the government's approach to regulation in the internet, data platform, fintech areas, and so on. Whether these amount to anything more than gearing the economy up and foreign businesses up for 2023, the major part of which will be to get the economy back on its sea legs, I still very much doubt. I think there's still a lot of nuance there. For every friendly, fuzzy statement there is about Alibaba or Tencent or Didi, there's a sort of an enforcement mechanism that we read about, or there's, party officials being sent into private companies. So I think people need to be a bit careful when they look at the kind of headline data here or headline statements. The rhetoric is changing, but I think it's purely tactical. I don't think there's anything really changing underneath.
Going back a year or so, it appeared to some of us in the West that Xi Jinping basically had unchecked powers. He was going into that 20th Party Congress in October, I guess it was. At this point, it looks like maybe that may not be true. Do you think that's right? Do you think his wings really have been clipped a little bit? And I'm not saying it's because of outside demonstrations, maybe within the power apparatus of China itself because of some uncertainty about some of his policies. Or is this just a temporary matter?
Yeah, this is the 64 trillion yuan question, which has kind of set tongues wagging in China circles all over the world, really. I mean, the short answer is, we don't know. And actually, even the people that could know don't really know. And I think the reason is that I think there's, there is a lot of change going on. There's a lot of nuance. There's a lot of rhetoric shifting going on. It's almost like, in some respects, that government ministers are freelancing when they talk about what's going on in the economy. So it's possible that what we often regard Xi Jinping as being the sort of sole autocratic power, but he's not a Putin in China, and he's not like a Stalin in China. There is a sort of collective leadership. So there are people that are really important in the party who he has to keep, sweet, and who support him or are very happy to kind of outsource to him a lot of power and control. But it's possible that that some factions, maybe some of the people that are going to take office very much more publicly in March at the National People's Congress, maybe it's possible that they've been a little bit more vocal with their boss. And yeah, all these things are possible. I think it's fair to say something different is going on. It's not quite certain what it is.
Okay, George, it's always such a privilege to have you with us. It's always learn a lot. Thank you so much. That is Oxford University China Center Associate. He is George Magnus. Now we have some breaking news coming across the Bloomberg right now. Some headlines about Bed Bath & Beyond. We know they've been struggling a bit. Well, now the talks to sell assets have stalled. Sources say Bed Bath & Beyond falters in its effort to buy a buyer in bankruptcy, and it appears that it is preparing for Chapter 11 filing without a bidder. So Bed Bath & Beyond continues to struggle. So as you can see, the stock is down even further right now in trading. We will keep you up to speed on the plight of Bed Bath & Beyond as it develops. Coming up, we're going to talk with former Treasury Secretary Larry Summers about those GDP numbers we got this week and what they mean for the Fed as it meets next week. This is Balance of Power on Bloomberg Television and on Bloomberg Radio.